The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
It's all about energy in this edition of Growth and Income Stock Picks with the editor of our Income Investor here at Zacks, Ryan McQueeney. You've picked a couple of interesting companies here. This energy producer, Dominion Energy, has been around for a while.
Yeah, so not to peel back the curtain entirely, but I did want to take a look at these because they are our two latest additions to the Income Investor portfolio.
Oh.
And the reason I wanted to look at this is because we sold some stocks before the new year, some of our struggling stocks, and this is us getting back in, adding more depth to the portfolio, and adding a couple more holdings. And I'm doing it in a relatively safe way. So Dominion Energy is an electricity utility. It is a popular utility pick, and it also I think should offer us a lot of the stability that we typically associate with utilities, and to me that is one of several safe ways to kind of dip your toes back into this market if you're still risk averse, which I completely understand if you are. Dominion Energy has a beta of just 0.2. That's a way to gauge typical volatility. Anything under 1 we say is on average less volatile than the market. It's also seen estimates come up, which we can take a look at here. 4 positive revisions within the last 60 days for the 2019 estimates. Still waiting on the end of 2018, the final report there, but I wanted to just highlight this. 2018, we're expecting earnings growth to come in at 13.33%. For 2019, the new positively revised estimates are looking for 5.64% growth. That's pretty solid for, as you said, a company that's been around for quite some time and a utility which we normally don't associate with, double-digit earnings growth.
Right.
So I like that about the stock. Those 4 positive estimates that we've seen, they've raised the Zacks consensus 3 cents over the past 2 months, which is a pretty positive trend. And it has looking even further into the future, has a long-term projected EPS growth rate of 6.6%, which I really like. Trading at about 16.6 times earnings right now. That's a discount to the industry's average, 17.7 times. So it's a bit of a value play as well. Getting a 4.7% dividend yield, that's quite a solid payout for us. A lot of things to like there, as I said, if you're still risk averse and you're wanting to play things a little bit cautious here.
Not to mention that the stock's been outperforming its industry over the past 6 months.
When you have a stock that's outperforming in the industry and the key valuation metrics are still telling you it's undervalued compared to the industry, that's a great combination.
Yeah, okay. Talk to us about MPLX Limited Partnership.
Yeah, so it's an MLP, a Master Limited Partnership. It's kind of a weird way to play the energy industry. I don't want to say weird. It's been around for quite some time as well. This structure, it's a unique way. It's almost like the REIT of the energy world.
Okay.
Essentially, by buying a piece of this, buying a stock like you would, you're a limited partner. And so what that means, really it means things for tax purposes.
Sure.
So instead of the company being taxed as we would put a corporate tax on them, the taxes are taken out of the dividend payouts to the partners, if you will, the shareholders, as we would typically associate that. So when you see the dividend yield, you also have to factor in that you're paying some tax on that, and I'm not a tax expert, so I always recommend with these types of stocks, if you're going to buy one, definitely put a little mental note to talk to your tax professional about it for tax season, which is coming up for 2018. But if we're buying this in 2019, you won't have to worry about it for a little while.
Right.
Anyway. Typically, these are midstream companies. This is what this is. It was actually a spin-off of Marathon, one of the largest of these diversified oil plays. Typically, they're midstream plays. So this could be logistics, which this company is logistics focused, transportation focused. You see some pipelines that are MLPs. It's giving us a pretty solid yield, 7.7% dividend yield. As I said, some tax considerations, and it's going to vary. 5-year annualized dividend growth of 16.2%, so that payout is consistently going higher. 12.7 times earnings right now. That's pretty solid. It's a discount to the industry average, quite a significant discount to the industry's average of 15 times earnings. Pretty solid growth metrics, looking for about 13% revenue growth in 2019. We like that. Estimates for the 2019 period are up 8 cents in the past 60 days, so trending higher. That's the trend we like to see.
Sure.
The other thing that this fits for me, besides all of those positive metrics, which are things we'd look for in any stock, is, again, getting back to that risk aversion and that safety. These typically, the MLPs, especially if you're in the midstream business, which most of them are, typically they're going to be the least price sensitive to the actual price of oil. So yeah, we've seen oil come off the lows a little bit, and we've seen some projections that have it raising back more into that high 50s, 60s range at some point in this year. That could very well likely happen if you don't want to gamble on it, but you still want to take a chance on some of these beaten down energy stocks. I think an MLP makes sense because it is going to be the least price sensitive. And to tell you what I mean by beaten down, just because this is not quite as price sensitive doesn't mean it survived the volatility of the equities and commodities markets quite so well. We actually saw weakness in the MLPs throughout the year in 2018. As we can see here, it actually touched its 52-week high right at the beginning of 2018, and then, you know, sold off in that February sell-off, found a bottom, rallied, didn't ever quite make it back to the new highs, and sold off again steadily through the last 3 months of the year. And I should say, this is actually the entire MLP index. MPLX is about a 9% weight. Yeah, 9% weight of this index. I just wanted to show that, yes, this is still one where we're coming in because these stocks have been beaten down, and we think we can catch this rebound. If you see here, we bottomed out on that Christmas Eve low that the rest of the market bottomed out at. It's been pretty solid trading since then, so we hope to catch that rebound as it continues to go up.
All right. Do you own these personally?
I do not, but as a reminder, as you said, as I said, we just added them to the income investor portfolio.
All right. Thanks for that. Don't forget, Ryan does a couple of other interesting programs. One is a podcast that you can see on the podcast page of Zacks.com, and that's Tech Talk Tuesday. And his live streaming video program, Monday through Thursday, Free Lunch. You can access that on most major video streaming platforms. A lot of interesting information that Ryan provides in those two programs. With Ryan, I'm Terry Ruffalo.